All right, apes, welcome. Today, we're plugging into the matrix. We're going to go find the glitches, the ones the suits really don't want you to see. Now, remember, this is not financial advice, okay? It's just some educational banter. The market is a casino, pure and simple. So let's learn how to count the cards.
So let's start right at the scene of the crime. Does this feel familiar to you? You see a breakout, you go long, and for about, 30 glorious seconds, you're an absolute genius. And then, bam! The floor just drops out. Your stops get triggered, and you're left holding the back. 1 minute, it's all green candles to the moon. The next, it's a straight red line down that completely nukes your position. You get whipsawed.
You know, it's the one question that keeps every single retail trader up at night. Are we just gambling here? Is there a signal hidden somewhere in all this noise? Are we just, throwing bananas at a ticker? Or is there a pattern, a code that we can actually crack?
Okay, first things first, let's cover the official story. The blue pill the system wants you to swallow. It's simple, it's safe, and, well, it's what they tell everyone to keep them docile and predictable.
This right here? This is the gospel according to the FIRE movement in every personal finance blog out there. You've heard it a million times, right? Max out your 401k, dump every last penny into a total market index fund like VTSAX, and then just wait for 30 years. Look, it's not wrong, but is it the whole truth? Or is it just the part they want you to see?
So here's where the road splits. The system wants you to be a sheep, just following the herd right into those index funds. But the apes, nah, we're hunters. We don't ignore volatility, we use it, we weaponize it. Forget just holding. It's time to take the red pill and see exactly how deep this rabbit hole goes.
All right, let's get into it. The first glitch in the matrix, money in motion. See, the suits aren't just buying the market. No, they're rotating. They're making these precise, targeted bets on very specific sectors they expect to outperform. So what you're looking at is called a relative rotation graph. Just think of it like a heat map for where the big money is flowing. And on November 10th, you can see capital is just flooding into these old-school sectors: materials, energy, financials, and industrials. This is not just random noise, people. This is a coordinated shift. It's a massive tell that the big funds are gearing up for a very specific economic outcome, probably one with higher inflation.
Okay, let's move to the next clue. This one comes from the options market. And sometimes, a single massive trade can tell you everything you need to know about conviction. It's like finding a single giant footprint in the middle of the jungle. You know something big was here.
Then this number just flashes across the tape. 15,000 contracts. On a normal day, that's a big trade. But on a sleepy China ETF, that is a flare being shot up from a sinking ship. So what exactly was the bet?
Somebody, somewhere, placed a huge bet that the Chinese market is about to hit a brick wall. So while the mainstream news is talking about a global recovery and soft landings, some whale out there is quietly positioning for a significant drop. This is the kind of trade that doesn't show up on CNBC, you feel me?
Glitch number 3. This one's a little more subtle. It's not about what the suits are buying, but what they're selling. See, in the options market, fear and greed are actual commodities you can buy and sell. And right now, greed is getting way too expensive. Check this out. The market is pricing in these huge upward moves for these stocks. The call premium is totally through the roof. What that means is people are paying way too much for just a chance at a big gain. So what does the smart money do? They sell this overpriced hope. They are literally selling lottery tickets at a massive premium to all the retail traders out there suffering from a bad case of FOMO. So we have our clues, right? We've got the targeted sector rotation. We've got a huge bearish bet on China. And we have these overpriced calls being sold off to the public. These are not random data points. They are a pattern. These are the glitches in the official story. So here it is, the apes theory. While retail is being told to just buy and hold the market, the pros are actively maneuvering behind the scenes. They're betting on specific sectors to rise, specific countries to fall, and they're selling that overpriced hype to the masses. They are playing three-dimensional chess while you're being told to play checkers. That simple path they talk about, that's for their liquidity, not for your returns.
So how in the world do you fight back? It's not with bigger bets, it's with better tools. You start thinking like a quant. You start to see the code. Let's look at one key concept that separates the gamblers from the house.
Understanding something as simple as theta changes the game completely. It's that constant drip, drip, drip of time value. When you buy an option, you're not just fighting the stock price, you are fighting the clock. The suits know this. In fact, their entire business model is practically built on it. They use Theta to their advantage by selling those overpriced options we saw earlier. It's a slow bleed, and believe me, they're holding the bucket.
Look, the game is rigged, but that doesn't mean you can't win. You just need the right tools and the right intel. We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVDA stock on Moomoo. Links are in the description. Smash the like, subscribe to the tribe, apes together strong.
So here's the final puzzle for you. The data clearly shows big money is piling into industrials. But we are standing on the brink of an AI revolution that could make half those jobs completely obsolete. So is this a genius short-term play by the suits? Or are they walking straight into a trap? What is the real play here? Drop your theory in the comments below. Stay sharp out there.